The economy has been showing major signs of weakness to a point where simply it can't recover from. The solution? Print more money and deficit spending. What a joke. What an unfortunate joke it is. The markets are being juiced, and that is only creating a massive dislocation that cannot be fixed by even more debt. The day of reckoning that many have warned about is always a worry for those who are unprepared. You came here for the truth, so let me unveil that for you. This video here is actually part 2 of the previous video on my channel. You don't necessarily have to watch part 1 to understand part 2, but if you watch them back to back, you will understand why in part 2 it was getting a little aggressive. There's so much going on here today. When you see the financial system, when you look at the stock market, when you look at the economy and what's been happening with jobs, my goodness, 50 million people, in fact, over 50 million people at this point had lost their job. You know that's a big problem. Some of them get their jobs back. That's not an issue. But in the meantime, we've created these huge disruptions. For some strange reason, they think that it can be fixed by giving people a $1,200 check and a bit of cheerleading, and it's just complete nonsense. Anyway, let's get into this video here. There is a lot to cover, so let's begin. I thought this was hilarious here because what we're looking at is a study that was done, and it's essentially highlighting the fact that what central banks have done, what they call unconventional monetary policy, UMP, have essentially destroyed different strategies of investing. And they prove that here in this study. Now you might think, well, too bad. But you have to understand what that does to the underlying fundamentals of the system. They have broken things. There are certain patterns and formations which are not perfect, which are not absolute, or else everybody would just copy each other all the time. But certainly you can pinpoint different things all along. People who have these very long careers, they're investing, they're looking at it. Today, that's all broken, and it's not a good thing. You need to be very aware of that. Mortgage rates set yet another record low, but home buyers pulled back. I have seen this going further down and down and down. 30-year fixed mortgages decreased to 3.19. It's unbelievable, but you got to look elsewhere too, in Canada and other places where you have seen this moving down to historic lows right now. And why? Because of interest rates falling lower. And what does that do to housing prices? It keeps them supported. But in certain areas like New York and other places, everything that's going on today, you have significantly lower sales. That's one thing, but prices have actually been muted, they've been subdued, and it doesn't seem to be turning around anytime soon. What the central bankers have done is completely eradicated market pricing, and that's very dangerous. Out of the Wall Street Journal, from flour to canned soup, the surge has put pressure on food supplies. Food makers work to meet rising demand after initial lockdowns ate through inventories. I'll show you a chart in just a second, but you know what's been happening here in 2020. Certain staple items have seen a huge demand where normally people were just buying a bag of rice if they needed it, a couple cans here and there. Then the store shelves were emptied very rapidly because of the concerns, toilet paper, and you know what happened. The reason I want to point this out here is that we can understand how fragile our systems that we use on a daily basis, whether it's something like the food chain, that supply chain is extremely easy to disrupt. And it was evident right here, but already people have forgotten about it. U.S. industrial production, I saw the news, it moved up at this considerable pace. It's excellent, it's fantastic. But when you actually see where it is today, it's not exactly a V-shaped recovery. Now, look, we're moving in an upward trend. Let's be honest about that. There's no doubt about that. But it's so historically low today. And when you look into what's coming around the corner, the propaganda about V-shaped recovery should be all but gone now, but it isn't. Every time I talk about this issue, I get a lot of hate mail, so we'll see if this happens this time around. A spate of bank runs breaks out in China, fueled by social media. This is what they're saying anyway. There has been many instances of this, and guess what? People don't trust the banks, and what do? They pull their money out. Maybe they don't pull it all out, but if you could see what happened in, for example, Greece, they were locked out of their money for a long period of time. When they opened up, they were restricted in how much they could take out. So sure, you're able to access your money, no problem, but it's going to be 50 euros a day, for instance. And what if they said that to you? You go to the bank and they say, yes, here is your balance. You've got $10,000 in there, but no, sir, you can only take out $50. You can come back tomorrow and try and take out another $50. You can come back the next day and try to take out another $50. How does that sound? And what's going on with inflation during this period? What if you needed that money for an emergency? Were you able to apply? Did you have to fill out a form? How does it all work? Who's making the rules? That's your money. You can't get it out. That's the whole problem I want to highlight by this. Who knows if this is even real? It probably affects a small percentage of the total people, but the principle is what we need to focus on. The banking system is not safe. It is very dangerous to keep our funds in this. When you think about the savings specifically, savings in a bank should not be considered. That's my opinion. American Airlines says it needs to shed 25,000 jobs by October 1st. The Fort Worth based carrier is continuing to urge voluntary, I love that word, departures with buyout and leave packages. If you walk out on your own, sir, we're gonna give you some money. But if you stick around, we might give you the boot anyway. How does that sound? Airline after airline after airline sending people home. You look at what's going on with these different manufacturers, Boeing and all of these others, massive companies, they got to quote unquote let people go. The furloughs, the layoffs. My goodness, why can't you just call it what everybody used to call it before? It's firing people. You got fired. It sucks, I know. But if we just call it for what it is, we're going to be able to realize the fact that these companies get the bailout money. That's your tax dollars. And I keep seeing the BS. It's garbage. It's BS. I'm going to call out anybody who talks about this BS here on the channel because I know specifically that these companies here have received what starts with the letter F, forgivable loans. They don't have to pay all of it back. They absolutely do not in order to comply. And even though they've already broken the rules because they took the money saying that they will keep the people, and yet they're getting rid of them anyway. It's a whole bunch of garbage. We're being lied to from the companies, from the government, and I certainly don't need it from some naysayers, from some cheerleaders out there. Get a grip. To finish off the video, this comes directly from the SEC's website. SEC proposes amendments to update the Form 13F for institutional investment managers. What does this mean? The Form 13F, let's just take, for example, Berkshire Hathaway. Whenever they buy and sell stock, they have to fill out this Form 13F. It shows you all of the different trades that they've been making. Just like the Swiss National Bank, just like others. They want to change the threshold right at the very bottom here. Today's proposal would raise the reporting threshold to $3.5 billion. So previously it was $100 million. Now they want to raise that to $3.5 billion. So essentially 90% of the companies do not need to report. There's so much going on the inside and they do not want you to know about it. I think it's so laughable when people are saying, well, the SEC is going to help me, or they're going to get the deep state, or they're going to protect me, and that is a bad department, but this is a good department. It's all corrupt. People, wake up. Wake up. That's all for this video. If you found it informative, definitely hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to check me out on Instagram and on Twitter and on any other platform, just search The Money GPS. If you want to learn how to sell stuff online, I'm talking about e-commerce. Right now, it is growing so rapidly, and in 2020, it is in fact the best time. I teach the strategies that work right now here in 2020, and I do it for free. Take advantage of it while you can. The AmazonGPS.com. If you want to be able to understand what has happened in this financial system, how we got in this mess, you want to understand the foundation, the asset classes, making money, everything in between is here. Check the link in the description. If you want the audiobook instead, themoneygps.com. All right, here's part one of the video. If you haven't seen it already, you definitely want to. There's so much in here. Check it out. Click it. I'll see you there.